Good morning. Welcome to Stock Market Today. It's Wednesday, April 8th, 2020. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today. Sign up for that free email where I get a lot of the content for this show. It also gives you some daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were mostly lower in Tuesday's trading, finishing near the lows of the day. Materials and energy outperformed while utilities lagged. Treasuries were mostly weaker with the curve steepening. The dollar was weaker on the major crosses. Gold finished down 0.6%. WTI crude settled down about 9.4%, adding to Monday's decline. As we get to the desk this morning, futures are up 0.5% as USA following that sell-off into the close yesterday. Asian equities were mostly lower overnight with Hong Kong a laggard, while Japan and Taiwan outperformed. They actually moved higher on the day. European markets are under pressure. Treasuries are mixed with the curve steepening. The dollar is stronger on the yen and euro crosses. Gold is up 10 basis points and WTI crude is up 2.9%. So there it is, folks. Rally fades back towards the key breakout level, right? We were highlighting, call it 265 on the SPY, 2650, whatever you want to call it. The 38.2% retracement level. It got tested a few times. Fade. Finally get a breakout. Tried to continue higher. Tried to get a follow-through day. And it faded. Quite frankly, we hit this 275 mark, 2750 on the S&P 500, and then faded. So if you're bullish, you want to see 2650 hold, because if it doesn't, we probably have eyes for 2450. If you're bearish, you are looking for 2650 to break. It's as simple as that, folks. Upside resistance is in the 2800 to 2900 zone. RSI is still holding bearish ranges, and that to me is interesting. Right, despite this monster rally that we've had off the lows, and it has been a monster rally, there's no two ways about it. RSI hasn't been able to break out of bearish ranges. Chaikin money flow is bullish but fading. Actually, it looks like we could be getting close to crossing back below that zero line. So the indicators are mixed to bearish. Market couldn't hold a rally yesterday morning. Volatility is still elevated, right? The VIX is still over 40. I think if you're going to trade, you have to be extremely tactical. You have to be extremely fast. If you're looking for investment opportunities, I think you should be doing your work, and you'll get your opportunities as two-way volatility is likely to persist in the marketplace. Your market in a minute now. What are we writing about in the note today? Well, the morning rally fades as stocks close near the lows. All major market ETFs are overbought in downtrends, and that's our overbought, oversold indicator that we are referencing there, and all of them are overbought within the context of downtrends. Sentiment is less fearful as prices move higher, and if I'm bullish on the market, I want sentiment to be overly bearish because that provides a tailwind, in my opinion. Right? You want to be bullish on the market. We want to see sentiment. Right? We want to fade extreme sentiment. EMP stocks are very bearish and overbought. Futures point to a flat open today. Taking a look at the major indices from a power bar perspective, right? This kind of belies the fact that most of these were up over 3% at one point yesterday and then closed relatively flat on the day. 1 bull to 6 bears for the Dow. 16 to 138 bulls to bears for the S&P. NASDAQ 10 to 23, not much change there. Small caps slid outperformer on the day, 94 to 487. Bonds down tick. Materials had a big day yesterday, up 2.66%, actually held on to their gains. 0 bulls, 13 bears there. According to the Chaikin Power Bar, large cap stocks and small cap stocks are strongly bearish. Major indexes across the board, however, are mixed. Taking a look at our stock of the day now. This one is picked by me, Zendesk, because ZEN is a very bearish stock based on the power gauge rating. That's largely a function. I apologize. I didn't hit the drop down here today to show you what the factors were, but the financials are very bearish and the experts are very bearish. Technicals are bearish, but earnings are very bullish. 20 factors kick out that very bearish rating for a weak trend, weak industry group. What I see is a stock that has become overbought, indicator rounding lower, money flow skewing towards the bearish side as the stock begins to underperform the market. To me, that's a nice setup for a bearish idea. if you ask me. I think that that's a really interesting setup to the bearish side of the coin if you do trade that way. If you're looking for software stocks, Zendesk wouldn't be the one that I would be looking at. I think there are probably better software stocks out there. But to me, I think you need to be focused on potentially some bearish ideas, right? I think you need to be trading two ways in this market if that's what you do. And Zendesk looks like a name where you can be bearish. Taking a look at our sector tracker now, movement of the major sectors over the last 5 days. Strong rally in the market gives us a lot of green on this screen with energy at the top of the list, right? That looks counter trend to me. No two ways about it. You know how I feel about energy, and I continue to feel that way. Materials as well looks counter trend. Staples has been a defensive group that's been leading discretionary. Tech, comms, healthcare, middle of the road, financials, industrials, real estate, all bullish. Utilities are lagging. And that's kind of interesting because this traditionally defensive group is a lagging. So it's something to just keep in mind as the market tries to stabilize here. If the market's going to stabilize and move higher, I want to see utilities lag. There's no two ways about that, right? I don't want defensive leadership to rally as if I'm a bull. So just something to keep in mind. What I will say is it's interesting to see these bond proxies towards the bottom of the list, even as rates continue to move lower. So we just want to be mindful of the key dynamics and relationships that are in play in the marketplace at the time being. So our industry in focus now is innovative tech services, which over the past 6 months has outperformed the S&P 500 by 6.23%. However, that power bar ratio is weak, as it is for most. 44 bears to 6 bulls, ranks at number 11 of 21 subsectors, having moved down 4 slots over the past week. So indicative names there: Roku, ROKU, Coupa, COUP, and Spotify, SPOT, are names that we want no part of within innovative tech services, right? So you can start thinking, you can start seeing the areas that you want to avoid. I'm going to apologize in advance. I forgot to change the chart here. So I'm going to do that on the fly as we take a look at XITK. Is the ETF that we want to look at here. So you're going to see how the sausage is made today, folks. I made an error and forgot to swap out this chart. So I'm going to swap it out for you now. And we're going to take a look at a little bit of what I go through every morning. So I apologize for this, but okay, it's fun. We're people. So let's take a look. Well, we'll have to do this quickly now. But here it is, Innovative Tech Services. Big rally. Kind of looks very similar to that Zendesk chart. Rally into the 21-day moving average, bearish money flow, overbought. Now we are fading. We're still an outperformer, but fading for this neutral plus stock that's in a weak trend, or this weak neutral plus fund, right? So I think you have to be mindful of what's happening in that regard. So take a look at that group today. Taking a look at our movers and shakers now. Yesterday's S&P 500 gainers and losers. Coles. It really looked like a short covering rally in the early part of the day yesterday, as a lot of the beaten down names rallied really hard, right? Coles, obviously a coronavirus play, 20.2% to the good. Capri, same thing, right? Phillips Van Heusen, all levered to retail. PVH did actually provide a COVID update to shareholders yesterday, so maybe that played into it a bit. ADS has been a beaten down name, but it did rally 14% yesterday. And I will note that Wells Fargo downgraded the stock today. There's Royal Caribbean, another one of the beat up names. Norwegian rallied yesterday. Some of the airlines rallied yesterday, which is kind of an interesting dynamic at play, especially in the early part of the day. And then the market began to fade away. So I think that that's kind of interesting. On the loser side of the board, MSCI, nothing company specific to take 5% out of that stock today. ATO, same story. Nothing company specific to take 5% there. Boeing is going to suspend production of their 787 at their plant in South Carolina. Boeing pretty much the gang that can't shoot straight these days. A lot of people want to play in and out. Hey, does Boeing look interesting? You know, I'm not for me. It's overbought in the near term. It just doesn't look all that compelling to me. But hey, you never know. Maybe they can get it together, but for now, I don't see any compelling reason to get excited about that stock. HWM down 4.5%, caught a downgrade from Barclays earlier this week, and Market Access MKTX down 4.4%. Nothing company specific to drive trading there. So sentiment is much less fearful. Here's the 13-day moving average of the CBOE equity put call ratio. You can see the spike here into the lows for the S&P 500, and now we've kind of fallen as some fear has left the market as equity prices have rallied. Remember, into the top we were overly exuberant, and now we got overly fearful, right? The fear and greed ebbing and flowing. We're back into more normal ranges, which if you're bullish, I guess you don't necessarily want to see. Right? If you're bullish, you want to see fear elevated because that acts as a potential tailwind to further market upside. As we begin to normalize, it's not that it's a bad thing or a good thing as we normalize. It's more just you lose what could have potentially been a tailwind to a rally, right? So it's just something to keep in mind as we work through the remaining 2 days this week, Wednesday and Thursday. Markets are closed Friday for the Good Friday holiday. So just something to keep in mind as we continue to drive through this week. Taking a look now, EMP, the rally fades, and I'm starting to, normally I use the RSI as an indicator, but I was kind of looking for something that becomes overbought and oversold a little more often. So I've started to do some work on CCI. So we're using the 21-day CCI here as a gauge for overbought and oversold for XOP, and it's overbought, right? And this actually lines up with our indicator at Chaikin Analytics. It's overbought within the context of a downtrend, right? So we tried to rally, fade, resistance here at the gap. EMP, I think, is an opportunity to fade some. If that's how you look at things in the market. If you do trade to the bearish side, you can take a look at this XOP. Kind of might be setting up here as a compelling opportunity. Very bearish ETF, 1 bull to 33 bears at the holding level for this fund that is below the declining 50 and 200-day moving averages and continues to underperform the S&P 500. So just looking for opportunities to maybe open bearish given the market's rally. And I think that something like the XOP starts to look compelling in that regard. So just want to kind of throw that out there, give you an opportunity to think about it. Also an opportunity to look at a different indicator. So that's kind of the genesis of why I've switched that up. Trying to find something that's a little more telltale, if you will, within the context of, becoming overbought and oversold. So that's kind of why I'm looking at it that way. And, perhaps there's an opportunity there to incorporate some new tools into the toolbox. So take a look at that for the time being. I think it's kind of an interesting way of looking at the market. And then finally, I will leave you with key retracement levels. Key retracement levels here to the upside, 277 for SPY is the 50% retracement level. Now we broke through 38%. And then you have 61.8% up here at the 290 level. So if you're bullish, you want to see this 265 hold, right? There's no two ways about it. Like I said earlier, if you're bullish, you want to see 265 hold. If you're bearish, you want to see a break, right? Ideally, if you were a bear, you wanted to see a continuation of selling into the morning today and actually catch an open below 265. But if you're bullish and we can hold 265, that's an encouraging sign. So there's your roadmap. There's your playbook. Head over to chaikinanalytics.com/test drive where you can sign up for a 14-day trial where you'll get my note every day, Mark Chaikin's note every Sunday. A lot of the thoughts and ideas that we go through that are pulled from Chaikin Analytics. Happy Wednesday, everyone. I hope you are all staying safe and all are well. Your families, your loved ones, thank you for spending time with me every day. I'll be back here tomorrow. Have a great day, everyone.